This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Welcome to the Smart Property Investment Show, the podcast by investors for investors. I'm Emilie Lauer, real estate journalist here at Momentum Media, the team that brings you the Smart Property Investment Show. Unfortunately, my co-host Liam Garment isn't here today. He's at the One conference in Brisbane, meeting leading agents and property managers. And from the podcast we've had since the beginning of the year, it seems that 2025 will be a busy year for property investors, as many experts have predicted a surge in the market, which is why I am joined today by Chris Christofi, the founder and CEO of Reventon, to discuss what first-time property investors need to know in 2025. Hey, Chris, how are you today?
I'm very well. Thanks for having me on the show.
Well, thanks for joining us. You're in Melbourne right now. And look, you are the founder and CEO of Reventon, which help people with their finances and guide them through their property investment journey. So I'm quite curious, were you always interested in property? When did it pique your interest? Tell me a little bit about your background.
Well, my background was I was in sales and I loved sales, and my partner at the time saw an ad and all it said is sales professionals wanted. Do you have a car? Do you have a phone? And it's going back a long time. Do you have a fax? I was 19. I'm currently 45. So over 25 years ago, she said 120,000 plus, call this ad. So I called up this job, and as I was talking, I was very enthusiastic. The lady goes, how old are you? I said, I'm 19. She goes, oh, you're too young. I said, don't hang up the phone. Please don't hang up the phone. Let me come in. Let me meet the people. And if they say no, let them say no to my face. Robin, at the time, the lady's name was Robin. She goes, you know what? This kid sounds keen. I'll get him in. I went through the interview process. I was interviewed with someone else. And the guy at the time said, Chris, what do you think? My response was, listen, I live at home currently with my parents. I don't know the difference in commercial or residential property, but if you give me an opportunity, I'll be your best salesperson within 3 months. They gave me the opportunity and I never looked back. I fulfilled my promise. I was one of their best salespeople. I fell in love with the property industry. I got into the market shortly after I started my job. I was about 19. My father gave me my first deposit. It was $30,000. Now that was supposed to be my wedding present. Now, I wasn't married at the time, and I said to my father, Dad, can I please have my money up front? And he said to me, what do you want it for, Chris? I said, I want to buy a car. He goes, no, if you want this money up front, and I asked it up front because I go, by the time I get married, the inflation's going to eat the money. There's going to be nothing left. He goes, all right, but if I give it to you early, you must buy real estate. So when I got this new job, which I loved because it was in sales, I was introducing prospective clients into the office. Now, Reventon's basically, I learned a lot from that business, and we were teaching people how to invest safely in real estate. I wasn't. I was just introducing people to come into our office on St. Kilda Road. They had a finance and a property element. So I started learning, I started researching, I started self-educating myself. I got that $30,000 that my father gave me, and I bought my first property, a 3-bedroom townhouse in New South Wales, Tweed. I bought it for $183,900. I sold it 6 years later for $328,000. And I made over 480% return or growth on my $30,000 deposit. I used the equity that I gained from that property and I borrowed against it and I bought more property. So by the age of 23 to 24, I had 8 properties duplicating this system. Now, lending was a lot easier 25 years ago to be able to get. There was low doc loans were a lot more prevalent and a lot easier. APRA was not as strict. So yeah, I got into the market.
Yeah, that's very interesting. And I think, that's what Australia is all about still today, to give a chance to people to show their worth and show they are wanting to work hard, yeah?
Of course. And look, going back to getting into real estate, you need to have a good team of people around you. You need to build your knowledge. And you need to speak to people that have a proven track record, that have done this many times before. Because a lot of people are on the internet, and I say this a lot, talking about real estate, but they don't have a good understanding of real estate. They don't have experience about real estate. They haven't purchased many pieces of real estate. They haven't sold many pieces of real estate. So a proven track record is always a good place to start.
Yeah, well, look, let's go back to your investment journey. So you mentioned you started at 19. You bought thanks to your father's deposits. How was your first experience buying that first piece of property?
Scary. So here I was, knowing that I wanted to do this. I remember the broker I had was James Cameron. He worked for Aussie Home Loans. And just before I was about to settle, I called the solicitor and I canceled the contract. I was too nervous. I don't want all this debt. Now, I would have had a debt of $170,000. And I was just shy of my 20th birthday. And I go, I don't want this debt. I'm nervous. I'm pulling out. Now, the broker called me after I spoke to the solicitor, said, I'm nervous. And Chris said to me, Chris, why are you doing this? I said, I want to build my wealth. So I want my family to be safe and secure. I didn't have a family at the time. Why are you pulling out? I'm too nervous. I don't want to have debt. I'm too young. And he goes, but focus on the reasons why you started this conversation, why you wanted to proceed. So he twisted my arm a little and he calmed me down, and I actually settled that property. And I thank him very much. Even with the knowledge of real estate's the way to go, even with my father giving me my first deposit, I was still very, very nervous getting into debt. So when my clients come to me and they're trying to overcome that mental barrier of getting into debt, I explain to them this story and I talk to them about good debt and bad debt and why they're looking at investing and not over leveraging. So we teach these principles at Reventon, how to safely invest so you can duplicate that process.
So do you think that the purpose of knowing why you want to buy is actually important in an investor journey?
100%. Having a purpose to why you invest is very, very important, because it's going to help you when you have that doubt. I don't want to get into debt. What if something goes wrong? Am I going to be able to pay this mortgage? Now, what people don't realize is people are not scared of people go, I don't want to have the debt. It's not the debt that people are scared of. When you unpack that, it's the repayment of the debt. It's the commitment that represents. But when you buy assets that are income producing, that have a good tax deduction, you have other incomes as well. And it's helping you to invest for your future. So I say to my clients, if you don't like risk and you take any action, you are employing the riskiest strategy there is out there, because no action guarantees you will be broke when you retire, guarantees you won't have enough money. So if you don't like risk, by taking no action, you are employing the riskiest strategy there is in investing in retirement.
And talking about a risk, there's always a risk when you buy properties. So you bought your first at 19, then you had other properties, I think 8 if I remember properly, but it didn't go as planned over the long term. Can you tell us a little bit more about that experience?
Yes. So as you mentioned, I bought 8 properties and I had a very high income. I was a national manager at a company, quite a lot of staff. I was making $300,000 to $500,000 back then, and I had a lot of people reporting into me. But the company I was working for went into receivership. So they owed me about $780,000, which they didn't pay me. My son, the worst part of the story is my son got sick at the time. I had a 1-year-old who got bacterial meningitis. So he was hospitalized for 2.5 weeks. So I was going from a position of having 8 properties, making $300,000 a year, doing really well, to not having a job, getting $348,000 worth of debt, my son almost dying, and moving back into my parents. So the things that I did wrong is I over leveraged. And when my income stopped, I was in trouble. So now what I've teach my investors how to not over leverage, how to put the right safety nets in place. And we've helped over 10,000 clients, of which 3,500 got into the property market. And I've written a book called Your Path to Wealth Brick by Brick, which is an Amazon bestseller. And I talk about the Reventon formula, how to safely get into the market, how to put the right strategies in place to not over leverage, to not do what I did when I was 24. So I had a lot of lessons from that. Now, my strategy was good if the market kept growing, if my properties were rented 52 weeks of the year, if I kept my income. So all of these things had to work in my advantage, which they didn't. But that taught me how to put the right safety nets in place, to get the right insurances, do the right POs, to be conservative in my estimates, to not over leverage, to allow for my vacancy rates, to allow for interest rates to go up, all these, to get the right insurances in place. So now we have a very, very robust strategy and formula how our clients can invest. And I always say the first property is the most important investment. And people go, why? Because it's the stepping stone to your second, third, and fourth, and fifth. So if you don't over leverage and you buy something that's manageable, that has a very, very good rental yield and a high tax depreciation, as your properties are going up in value and you're building your equity, you are also paying down your debt. So your LVR, your loan to value ratio, is safer, which means you can buy more property. You can duplicate that process quicker, better, and more efficient.
Yeah, it's all about the strategies. Now, I'm quite curious. How do you get back on the property ladder when you experience such a setback?
You don't quit. You realize that there's a lot of lessons and experience to start from. Now, when people say I started from zero, I say I wish I started from zero. I started from a debt of $348,000, but I also had experience. I knew property was a good investment. I made millions of dollars through my property investments. I know why I lost them and why I went down. So I took those lessons and I learned, and I built a robust strategy, and I became wiser and smarter, better, more efficient. So you don't quit. Now, I said to you at the start of this podcast, what is the riskiest strategy anyone can employ?
You tell us.
Strategy.
No strategy.
So if you don't have a strategy and you don't take any risk at all, you're going to definitely end up broke. 95% of Australians will end up under what they need in retirement because they take no action, or because, like myself, they made a mistake, but they didn't get back on the horse to try again. They didn't take their experience and start again. I've had clients that are very young that invested with me. I've had older clients, but we make sure that their strategy fits their risk tolerance, their age, their debt levels, all these factors. So the first meeting we have at Reventon is a discovery session. I want to really get to know why you want to invest. I really want to get to know what your risk tolerances are. So the first meeting, it's not about property. It's not about how much money you want to spend. Let me get to know you. Let me get to know, what are your goals? I want to pay off my mortgage quicker. I want to buy 5 properties. I want to build my wealth. Well, why do you want to do all these things? So these are the things that we establish.
Yeah, well, again, on that track, so you experienced a setback, and then you had to invest again. Were there that little bit of fear that it wouldn't work, or did you block any of the emotional aspect out of the investment process?
Well, like the first time I invested, I was terrified. I told you, I almost pulled out, and I was convinced. But after that, I had a lot more confidence going in it. And I knew that it wasn't that I was buying property. It wasn't, I had a strategy. I just should have had to revisit certain elements, not over leveraging, making sure I had the right insurances. So that was one of the best setbacks that I had in my life, because I learned so much. And when I built Reventon, I wanted to make sure that my clients don't over leverage. I wanted to make sure they're buying in high growth areas. I wanted to really understand the fundamentals to what makes a smart, astute property investor. How do you become a good investor that can duplicate a process? Now, as I mentioned before, 3,500 people to get into the property market, and we're just about to turn 20 this year on the 21st of March. It's been a long journey. It's been an amazing journey. And we keep learning new systems. We keep reading the market, because the market changes, information evolves, but people's ability to take action, people's fears have always been the same. I don't want to borrow too much money. Is this the right area to buy? Should I wait? These are questions that have never changed. Their fears are always the same. Your knowledge changes, but the way you act and the way you should act, and that's getting to the market whenever you can afford it. Make sure you do your due diligence. Make sure you work with good companies. That's never going to change, ever.
And we're going to talk about these questions a little bit after. Now, just before we go into a break, I want to know where you are at now in your portfolio. So how many properties do you hold right now?
Oh, it's not the answer that I want at the moment. I was up to 23 properties. I got to, but now it's a lot less, because I recently gone through a divorce, so it's a lot less now. So I have to rebuild that as well. But getting to 20, 30 properties I can do quite easy because I have the knowledge. I'm actually about to launch a product in the next few months, a bespoke property service for people rebuilding their wealth after a divorce or a separation. So I always live and breathe what I say and teach people. So I'm about to relaunch my product. So it was up to 23, 24 properties at its peak. That was about a year and a half ago, but I've had to offload a lot of them because of my divorce. But I did that with ease because I know that I have the knowledge up here on how to rebuild it over and over again.
Fantastic. Well, now we're going to take a quick break. And when we are back, we will be talking to Chris about some advice that he can offer first-time investors. I am joined by Chris Christofi, founder of Reventon, and we are discussing first-time property investors. So now, Chris, you are a seasoned property investor, and you've started Reventon to help others grow their portfolio. Reventon has a team of experts in property, investments, finances, which basically helps investor from the get-go. So do you want to tell us a little bit more about the process, Reventon, and why was it important for you to help others invest in properties?
Well, for me, I know that property is a very, very good investment tool, a good retirement tool. 73 out of 100 millionaires in this country do it through real estate. Australians love real estate. They love an asset they can see. So I'm a big, big advocate and believer of bricks and mortar and why it's a good investment. Buying residential real estate is very safe if you're buying good high growth areas that offer a 4.5% to 6% rent return with high tax deductions, and it's an easy process to duplicate. Now, when you talk to a bank, a lot of people think a bank gives out money, which is correct in that statement, but what a bank does very, very successfully is it assesses risk. And if a bank will give you 90, 95% against a residential property, that should indicate that it's safe. So if you speak to a good company like Reventon, they can give you the right advice, you can get into the market, and you can duplicate that process over and over again to secure your wealth and your retirement. So the reason I like property investing, as I mentioned, it's predictable, it's safe and affordable, particularly in the residential space. So I specialize in real estate from $500,000 to $700,000 around Australia. So there's different markets and different cycles. So I look at where the market's heading. Now, I've sold real estate in regional Victoria, in Southeast Queensland, in Adelaide, in Perth. I go where the market goes. I go where the data is, where it indicates. And the biggest key advantage of working in companies like us, we believe what we say because we invest where we say to invest. We use the same builders. So I had a campaign last year and I said, invest where we invest. Now, I've been doing that all along. So it's very, very easy for me to sit here with confidence and talk to you about it. When I put all my money into these areas, when I put my family into these areas, my team, my clients, and it's very, very researched. So it's very research backed. So we duplicate a successful process and we look at the property clock around Australia.
Great. Well, basically, you're preaching and you're doing what you're preaching. So that's pretty good. Let's talk about first-time property investors. So what are some of the first steps they should look at even before purchasing a property?
Look, I always think of the term paralysis by analysis, which means you get too much information, you don't know where to act. Now, to clear out the noise, go to a company with a proven track record and ask your concerns. Have a discovery session with them like we do at Reventon. And that discovery session uncovers why they want to invest, which keeps you on track. Now, I say to my clients, I'll ask you for your trust once, I'll never ask it again, because my results will do the talking thereafter. Now, after you bought a property, if I've shown you a property, it's delivered the results I've said, it's safe and affordable, I get you into the office every 6 months, will you buy a second and third off me? If it's performed the way we said?
Sure.
You've made money?
Hopefully.
Would you refer me to your family and friends?
If it works, why not?
So for me, a lot of our clients are based on referrals. A lot of our clients are based on repeat clients. So we have a 240% return on clients. So most of our clients have 2-3 properties. Now, the only way we can boast that stat is because what we say works. What we say has a proven track record and a methodology around it. As I mentioned in my book, the Reventon formula. Now, for me, When I wrote that book or when I got in the industry, I did that because I wanted clients, I wanted Australians, I wanted families to make smart investment decisions for their families for now and generations to come. Now, I've imparted my knowledge wherever I get the opportunity to help people, to give them a copy of my book. And even if they don't buy property through me and they do it themselves and they do it smarter, I'm still happy because that's my purpose. As a business owner or as a CEO, I want people to buy property in the most safe and affordable manner. Now, do I want them to buy through Reventon? Sure, of course. That's why I got into business. But if they do it better as a result of an interaction or time with me or my team, or because they picked up my book, that makes me very happy.
So for our listeners, what are some of the pitfalls first-time investors should avoid?
DIY, do it yourself, thinking they know better. Now, I don't think anyone knows better than someone that's done something 1,000 times, 2,000 times, 3,000 times, 4,000 times. So usually when people want free advice, it's usually the most expensive advice. Now, our first meeting is free, but our engagement fee costs money. Now, the reason I do it free is because I believe in what we showed people, I believe in our knowledge, and I believe people are going to want to engage our services. If they don't, that's fine. But trying to do it yourself or going to an uninformed family or friend member, they're going to steer you in the wrong direction. I want to give you an example. Let's look at a traditional investor. This is what they do. Walks into the bank. Hi, Mr. Commonwealth Bank. My name's Chris. Here's my liability. Hey, Chris, you can borrow $800,000. Cool. I walk out. I go to my local real estate agent. What area do you think they're going to show us? Their local area.
Yeah.
Now, I've gone to the CBA. They're only going to show me their own products. They're not going to tell me, hey, Chris, ANZ's offering you a better product. So I've gone to CBA. I've got a CBA loan for 800 and I'm buying in my local area. Now, my local area might be a good area to live in. It might not be the best area to invest. So I want to have someone who has access to Australia-wide properties. They can give me the ones that are in emerging markets now. I want to go to a broker that can give me all the lending opportunities, not just the CBAs. And I want to know how much I should borrow based on my risk tolerance, based on my age, based on my debt levels, based on how many kids I have. All these things play factors. So at Reventon, we turn the process on its head. What can you borrow? How old are you? How long are you going to be in the workforce for? This is offering you the best opportunity. This is the amount you should borrow. Yes, you can borrow 800,000. We don't think you should look more than 600. Now, the property needs to be new to give you good rental yields. I talk fast when I get excited. And when I talk about real estate, I get excited because I love this topic. So, and we analyze exactly what's your risk tolerance. Even though you can borrow 800, according to the bank, we recommend you, being a first-time investor, should borrow 600,000. Let me go away with that information. Let me show you some properties that fit what's going to make your strategy work.
Yeah. So what are the big differences between, a first home buyer and a first-time investor who have already bought their owner-occupied property? What's the difference in the process?
It's a very different process. A homeowner is very, very emotional when it comes to buying their own property. Now, if you're a rent investor, now, by the way, I still rent today. All my money's tied in investment properties. So I still believe renting is a better strategy because I have 100% tax efficient debt. I've been rent investing since I was 19. Even though I owned all these properties, I wasn't living in any of them. Only once I lived in a property that I bought for a year and I sold it with no capital gains. But for a majority of my time, and I'm saying about 95% of my time I've been out of my parents' home, I've rent invested. So the difference between a rent investor, you should buy a property for logical reasons, not emotional. Don't buy with your heart, buy with your head. Buy according to data, buy according to numbers. But when you buy your own home, there's an element of emotion. I want the red picket fence. I want to go to the Commonwealth Bank because my parents shopped there and I'm a generation banker. These things are not good strategies when it comes to maximizing your returns, when it comes to investing efficiently. And rent investing now has become a lot more popular because a lot of young professionals want to live in the city, but they can't afford in the city. So they need to invest in other areas. So I did it because it was the right strategy for me. I was a rent investor before the term was a term. I was ahead of my time in that regard. Now it's become more prevalent because the property prices have gone so far. People they can't live in the city. They can't live in Richmond. They can't live in South Yarra. They can rent there and they invest in different areas, whether that be in Queensland, Perth, regional Victoria, whatever that may be.
Yeah, no, reinvesting is definitely getting more popular, and especially when you live in capital cities such as Sydney, when affording a property is becoming more and more complex.
Another great example, Sydney, yes.
Now, what are some risks with property investing? We touched a little bit upon that through your own journey, but what are the major risks?
Don't over leverage, which over leverage means don't borrow too much money. Make sure you can afford the repayments, but also make sure you can afford 2% interest rate right home, which means if the rates go up, rates never go from 5% to 20% overnight. They go up gradually. So if you can allow yourself a buffer, as the rates go up, then you speak to your broker, or if you're dealing with a great company like Reventon, we get you in every 6 months. We go, hey, the rates are going up. Maybe we should fix part or all of your loan, depending on the circumstances. So you need to be aware in doing your reviews. Don't over leverage. Allow for an 8% vacancy rate. Allow for the property not to be rented 52 weeks of the year. Allow for 48. Also, try to have a $30,000 buffer. Now, that buffer represents time if you lose your job, if there's no tenant, and also have the right insurances in place, landlord insurance, income protection. Step 1 is to get the knowledge. Step 2 is action to buy the property. And step 3 is to make sure you have the right insurances in place. So by speaking to a company that's navigated and done this process thousands and thousands of times, that will guide you. Now, when things go wrong, because they do go wrong, you're dealing with banks, solicitors, builders. You've got someone that can navigate through that quickly, that has the answers to these questions. So do we have every answer to every question? No. But do we know where to find the answer straight away if I haven't heard the problem before? Absolutely.
Great. Well, we're going to a quick break, and when we're back, we will be talking about what to expect in the property market this year.
At Invictus Australia, we're all about supporting veterans and their families through the power of sport. Whether it's helping veterans stay connected with their local communities, assisting them in their transition to civilian life, or promoting mental and physical well-being, we're here to support them. From grassroots programs to international sporting competitions, Invictus Australia empowers veterans to take on new challenges, stay active and thrive. Join us in building a stronger, more inclusive community through sport, because together we are unconquerable. Visit invictusaustralia.org to find out more.
It's the team from the Smart Property Investment Show here with Chris Christofi talking about what first-time investors need to know in 2025. And Chris, before we dive deep into the ins and outs of the 2025 market, I'm quite curious to see the market evolution. How did the market change compared to when you bought your first property? Do you believe it's harder now or it's easier?
Look, property doubles every 7 to 10 years, and that's been a tradition for over 100 years. So the right time to get into property, people go, when's the right time? The right time is always yesterday. When you can afford to, don't have a leverage, get in the market, start making money. You're never going to outsave the growth of the property market. So get in there when you can afford to. If you can't, I'm waiting for it to come down, then the property market goes up and you need a bigger deposit. So how has it changed? Look, I think the fundamentals will always remain the same. Don't over leverage, speak to a good company, and do a process you can duplicate. A lot of people, they maximize their borrowings, 800,000, but it's only renting for 500. So they can't get in the market for another 4 or 5 years. But if they bought a property for 600 that rented for 550, then get in the market in 2 years and they can keep going. And their strategy is a lot more nimble and robust. So how has it changed? Look, the property market's gone up more than people's incomes, which means it's a lot harder to get into the market. But there's creative ways. You can maybe co-borrow with someone. You can buy off the plan and save more of a deposit. It all starts with a conversation. Find a friendly company like Reventon, have that conversation. I can't afford properties. Now's not the right time. It's always the right time to start the process to start the conversation, to start building your knowledge. Because it might have taken you 2 years without that conversation. But by knowing where the target is, it might only take you 12 months. So start that conversation.
Well, everyone is predicting 2025 to be the property year with a buyer boom. So do you believe it's going to be the same?
I think it's going to be a great year for property. I hear a lot of predictions, and I go back to saying a lot of it is noise. Well, don't buy property now. People are freaking out. I did an experiment while I was writing my book. When the people were saying, don't buy property, it was like 2017, bad time. And I was buying property and documenting the process. I bought over 15 properties in 2.5 years using my methodology in multiple locations. And I wrote about this. So the second version of my book came out and I put this as an experiment. I invested over $7.5 million and I made over $2.1 million in capital growth, $430,000 in cash flow, $191,000 in positive cash flow using my methodology. And all you heard is, don't invest. And the people are fear-mongering. They're telling people why not to get in the market. And I always, I don't listen to that noise. I use a good strategy that I know can work in any market. The strategies that we teach can work in a market that's flat, in a market that's rising, and in a market that's not rising. Because there's the medium house price, but there's always pockets that are outperforming that. So the medium house price doesn't reflect every area in every state. We research the macros, the data. So yes, it's going to be great. Yes, for us, it's a great story now because yes, it will be in most areas. But I want to go in the areas that are going to provide more growth. I want to buy in areas that can always grow, and affordability is king. So going back to your question, yes, I think it's a great time to invest, but I don't listen to all the noise. I listen to the data. I listen to where the government is spending infrastructure. I listen to where the migration's going. I listen to where Bunnings, Costco's going, where the schools are opening, where the infrastructure, where the jobs are being created. I look at a system called PIDE, Population, Infrastructure, Employment and Diversity. I follow that.
So I guess PIDE are the key factors for the 2025 markets.
There's always fundamentals to why markets do what they do. I want to understand why a market's grown and what's showing the next area. If you're talking about a property that's boomed, you're probably a bit too late. You've missed the boom part. You need to understand why it grew. I was investing in Geelong in 2014. My clients have made a ton of money. Then we went to Southeast Queensland. My clients made a ton of money. Then we went to Pearl. I'll give you example after example after. We were there 2-3 years before that everyone goes, buy in this area. We were there years before because we're looking at the precursors to the data. What are the forward indicators? If you're talking, it's like me saying to you, hey, here's the lottery numbers that won last night. They won 9 million. Who cares? That's past data. It's the same when it comes to when you're talking about a booming area. Hey, this Bitcoin went up 10 times. Jump on it. The smart money gets in before. Smart money gets out. Property is the same. Understand where the smart money is going. And the smart money is quiet. It's not all jump in now. That's the ones that lose all their money.
Yeah, so basically get in before everyone else, yeah?
In an area, get in at the start of the curve in the forward indicators.
So what are some of the other key factors that are shaping the 2025 market?
We've got to look at interest rates now. We had and interest rates created a very negative bias sentiment. People were very fearful, and the media love fear-mongering, so people would not get into the property market. Seems to have stabilized. I do think this year we'll see a couple rate cuts. Inflation seems to be under control. So these things just increase bias sentiment. But I say one thing, and I want, if anyone listens, I hope they listen to this one point. We're always going to be getting older. We're always going to be getting closer to retirement, and we're always going to be paying tax. These factors aren't changing, which means we need to get into the property market because you don't have an infinite time to invest. We have a finite time. So the right time to act is yesterday on the proviso we can afford to keep our property. We don't have a leverage like I did when I was younger. So things that are never going to change is we need to invest We're getting older and we need to get into the property market. So people that are waiting for the perfect time, there's a photo which I love. It's an old man with a walking stick. And on top said, waiting for the right time to buy property but never bought.
Yeah, because you have to create your own right time, I guess.
Or you have to take action. Without action, no action means no results. No results means you're going to be broke. You're going to end up like a statistic.
Well, we touched a little bit upon that. Location is key. So what are some of the upcoming areas for 2025?
You've heard the term location, yes?
Mm-hmm.
I've coined my own term, and I've say affordability, which is even more important than location. Buy where you can afford, buy where it makes sense. Now, the short answer to your question, I never like answering this question because I want to get to know what the client's borrowing capacity is, where they can borrow. Now, we were investing a lot in Perth over the last couple of years. The market's coming back to Victoria now. We're seeing a lot of strong investment come back into Victoria, which is good. But that answer is always evolving and always changing. So the best answer I can give you, speak to someone to understand your risk tolerances.
Fantastic. Well, now let's talk about what is coming next for you. You said a little bit earlier you want to rebuild your property portfolio. So I guess there's no holding period around the corner, yeah? You're going to invest?
Of course. Now I'll be investing exactly what I'm advising my clients to invest, like I did before. Like I did my experiment, I'll be doing another one where I'll be documenting the whole process, because what I say I believe in, what I say works. I have thousands and thousands of case studies. I'm a living, breathing methodology that it does work, a case study that it works. So for me, I'll be rebuilding that. But more importantly than me is I'll be ensuring that our clients keep building their wealth. The reason I started this business back in 2005 was because I wanted to educate as many people as I can to get into the property market safely and securely so they can duplicate that process. So it's business as usual for me. I'm very excited for our 20-year anniversary. It's a very big milestone. We've built over 10 businesses and brands in finance, accounting, property management, financial planning, property advocacy, buy new builds, established. We've done a lot of things and we're just getting started.
Fantastic. Well, that's all we have time for today on the Smart Property Investment Show. Thank you so much, Chris. That was super, super interesting.
I hope you liked it. Thanks for having me on the show.
We will be back soon in just a few days with another episode. Bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.